Do you want to become a real estate investor and you're not really sure where to start? You're in the right place. Whether you're a new beginner or struggling and very seasoned, or you're seasoned and you're doing great and you're just looking for better ways to close more deals, you're in the right place. Each week, I pick a random house off the internet, I analyze it for a cash deal and a creative deal. Welcome to the Corner Barn. I am Chris Thompson, that bearded guy, the creative guy, second generation realtor and investor with 19 years in the business. When I started this podcast, my goal was simple. It was to help beginners and struggling investors close their first deal or their next deal, all using low to no cost tools to analyze property and craft strong offer. This is the weekly deal analysis. Let's get into the show. Hey, real quick. I already know you're going to get some value out of this, so if you would, hit that like button down below. If you know somebody else who likes real estate and wants to learn, share it with them. I appreciate it. This week, we are jumping into Little Rock, Arkansas, and we are going to analyze 1123 Old Charter Court. They are asking $245,000. It's a three-bedroom, two and a half bath, 2,000 square feet, and they've been on the market for 138 days. Looking through some of this stuff here, it's already saying fixer upper, which usually tells me as an investor that this is something I should look at. Just a little tip there. So first, let's start with these pictures and see what we can find. Personally, I hate trees that are over top of the house, especially big ones, because, well, storms. Looks like we got a little growth down here, and it's just more maintenance. It's hard to grow grass. I love trees, don't get me wrong. I just don't want them that close to my house. Looks like we got some mold here, but overall, pretty nice, pretty clean. Not so nice and clean right here. Maybe it was good from afar. I'm leaning towards no basement because these look like crawl space fence here. Concrete porch. Good for a chair or two. All right. Now AI generated, so that's not actually what it looks like, but close. This is, okay, that's what it looks like. Nice space. Got some lock and pop LVP flooring, lots of light. Dining and living. Kitchen. Wow, these cabinets are really old. Formica countertops. All right, so we know we need a kitchen in here. And this is the AI generated with all the fancy stuff. I mean, it's a good space. So we got a lot of cabinets and countertop space, which is nice. But that's going to require a whole new kitchen. And what was in here? Maybe the washer and dryer. That looks like a washer and dryer, and that's probably a gas line. And one level. Rec room. Carpet looks not newish. And it's got a couple of stains. And then, how many levels is this? Seriously, what is this? Come on, people. And the bathroom's gonna need a facelift as well. Like what the heck? That is one fancy shower, I guess. All right, so we know we're coming in and we're gonna redo some we're gonna redo some things. And we're gonna target on the kitchens and baths. Because I don't care where you are or what type of market you're in, kitchens and baths always have sold homes, and in my opinion, always will. Not sure what we got going on here. It looks like a bunch of wires hanging out. Could be where the HVAC wire and stuff comes in. They built the deck around a big tree. Oof. Now here's what it looks like when you computer generate something. I know these aren't super harmful, but they can be. I would get rid of them quickly. And you got a dead limb here. All right. Overall, pretty good footprint. And I think this is only a 3 level. Sometimes this style of home comes in a 4 level. Got garage. So, all right, let's see what the agent is telling us here. Subdivision, but no HOA, which is nice. Gas fireplace. Interior needs some TLC, we know. Good bones. Strong investment potential. I mean, for the right price, anything can be generally a strong investment potential. Value-wise, Core Logic saying 240, Quantarium 239 and a half, so basically the same thing. Median list price in the area is 223 and a half. Average sold price 240 in 48 days. And let's see, when did this one actually sell? 24 for 260. We can take a quick peek. Wow, they like ducks. All right, so a lot more updated. A whole lot more updated. All right, what else I got here? This one, 17, that's not going to do us any good. See if you got anything else. Here's the same street again. 23. All right, so I think that 240 sale was the best thing that we got here, and that was a lot more updated. So overall, for the kitchen and both bathrooms and cleaning up the yard a little bit, I think our renovation budget should be around $60,000. And that's to go through all of the things, pay for all of the stuff, and make that happen. So we're going to say a 60K reno. All right. So I think we figured out everything we can on here. Now we're going to jump over to the invest nest and break down the cash deal. All right. So their estimated value is basically the same as they're listed at. They're not giving us a potential rent value. Um, Pulaski County, that'll come into play in a minute. Built in 73, so you do have to test for lead. The national date on that is 78. So anything 78 or newer, you don't have to have continually lead testing because that's when the federal mandate went in that you were not allowed to use lead paint on a house anymore. Owner details. So one thing that the InvestNest does is they offer skip tracing, including in their price. If you want to try it out, it's all one at a time. You can't upload a big list or anything like that. But for the new, the beginner, the struggling, the hey, money's tight, fuel's really expensive right now, so hey, I need to save some bucks. I believe the Invest Nest is like $40 a month. There's a link in the description down below in the comments that will get you your first week for free and 50% off your first month if you want to try it out. You know, there's plenty of great services out there. This is the one that I choose to use. Now let's see, they bought this. Can figure that out. No, they're not telling us when they bought this. No, wrong one. Here we go. So they bought it in 04 for a pretty seemingly a good price. They probably do not have, oh, and it's in a family trust. Well, do you want to keep the family trust producing income? Because we're going to ask them to be our bank on a seller finance deal. Because after, what's it, 2026? So this thing probably already paid off. All right, let's break some numbers. One, one, two, three. Charter. So based off of everything we saw earlier, I believe our ARV or after repair value is actually that $240,000 price. So to figure out what I'm willing to offer, it's going to be 240 times 70% minus repairs. So I'm going to offer 70% of what I think it's worth once it's all cleaned up, minus the repairs. It's going to be a pretty low number. And we either get it for a really good price or we use our lowball cash offer to entice somebody to bring us or accept our seller financed or creative deal. There's multiple variations of creative deals. If you are interested to learn more of those, just drop me a comment down below. I utilize 5 or 6 on a weekly basis, and overall, there's 10 at my disposal. So 240 times 70% is going to give me 168, and we're thinking about $60,000 in renovations. So minus 60 off of that. That's going to give us an offer price of 108. And closing costs are going to be 4 points because we're figuring we're going to offer to pay both sides of closing. Obviously, our numbers coming in really low. But to us as investors, that's how we have to play the game. Our lender is going to charge us at least 2 points, whether you're doing a traditional loan or an investor loan. Our cost of improvements, we said we're going to be 60,000. And I do want to wrap those into my loan. 25% down. Interest rates, I believe, for investors are about 6.75 right now, and we want a 30-year term on that. All right, rents. Now we need to jump over to the Section 8 or HUD website to see what they're offering because neither one of the other two sources showed us. So pull that up. Okay, so for reference, so according to HUD or Section 8, for a 3 bedroom, they're willing to pay 1540. It's usually a little bit below that, but we're going to base it just off of that number, and I can get more into detail later. If you want to know more about that and why I analyze the way I do, just drop a comment. I'm happy to answer it for you. All right, so they're saying 1540. Now, the other site I do want to check that I don't currently have pulled up is Rentometer or Rentometer. It's a great site, very, very useful and very user friendly also. You can sign up and pay for it and use it as many times as you want. And I don't think I can use this one for whatever reason. I've got it pulled up here on the HUD or Section 8 website, and they're saying they're going to pay 1540. We don't really have anything else to go on because the Invest Nest was saying that, well, they didn't say, and Realtor for the same thing. I don't think we got that far down, but rental wise, here we go. We forgot to check this part earlier. Sorry. Where we got for a house? House for rent, house for rent, house for rent. Nothing but apartments. All right, so apartments are, so for a 3 bedroom, we're looking at about 1680, 15. Um, I think we're just going to stick with this 1540 number. Does that sound fair? And remember, I don't know this area. I don't know this market. Check with your local realtor and or property manager. Check with a couple of them. Because there's plenty of agents that say they know rentals, but they don't. So And on the flip, there's plenty that just don't want to mess with rentals. All right, property taxes, 2,600. That seems about right compared to what Realtor was saying. And $1,500 a month, or excuse me, $1,500 a year, or 125 a month. 10% management fee, and our tenant's going to be paying these utilities, so we're not going to factor that stuff in. War chest or reserve fund, I call it my war chest, and that's 5% for repairs and maintenance, vacancy, and capital expenditures. We know we're coming in to do a large capital expenditure because we're going to replace kitchen and baths to give this thing a really nice facelift and make it pretty again. So 15% each month off the top goes into that war chest because it's never a matter of if it's going to go wrong. It is a matter of when. 2.5% increase on rents. Plan to hold it for 10 years. And we are real estate investors. We don't pay full commissions. Excuse me. Let's see what these numbers spit out. You were looking for a number, right? To see if it cash flowed? I know. But if you've made it this far in the video, if you haven't done so already, please hit that like button and share it with somebody else who might find it interesting. Ooh, even at all that, we're still losing $10 a month. But this may not be such a bad thing because once it's fully renovated, then you can refinance at a much higher value, I think, to one, recoup all of your cost and put long-term fixed debt on here. Most of the time, somebody's going to be doing hard money on this. I didn't run it as hard money because the interest rate's like 10, 12% on average. I've seen higher, I've seen lower. But overall, just for this analysis, not a great cash deal, unfortunately, because you need so much cash. So, but we're doing a $60,000 renovation. So once everything's done and renovated, so if we buy it at the 108 and put everything into it, overall, we're still pretty low on that. I would say all in numbers carrying timelines, you're sitting probably around 180, 185,000. If the true value is 240, you can refinance, pay off that lender on the first, pay yourself back, or also pay that lender back for the refinance. Um, and you might actually be even able to walk away with a little bit of money or be in the deal for no money. If you want to see a full analysis on that, I'm happy to do it. Just drop a comment down below and we can connect to analyze a property that you may have in mind. All right, cap rate pushing 9%. DSCR doesn't work. They like to see a minimum of 1. Cash on cash, no good here. But ROI over the time, you're pushing about almost a 7. And again, the 1% rule. That's why I don't like it, because this thing says it's a 1.43 on that. But it's just the math isn't mathing on that. So I still use the 1% rule to just kind of do a sniff test to get it close to see if it's worth analyzing even more. But ultimately, you have to do the numbers. You can't just rely on one thing. And that's even included with the rest of the stuff we're going to review. Don't just count on that. Use it, enjoy it. I hope it's helpful, but talk to a local, break some numbers down because there's some things in a local area that I just don't know, nor do I invest in these areas, so I really don't know. All right, all in here is our breakdown, 231 into the reserve fund, mortgage over here, expenses, income, breaks all our fingers down. And I love the analysis they do here. So we're in year 2 before we even start moving in the right direction. Not a good deal. Oof. You're 15, you're about 16 years just to get that back. Not a good deal. Now we're going to go do my favorite part, analyze the creative side. All right. Got it pulled up here on my website. You can download it for free, christhompsonteam.com. Link will be below. All right, ARV we think is 240. And our purchase price on this, we're going to have to get a little crafty. I don't think we can go as low as 108, But ultimately, knowing that we're going to put 60 into it, we think it's worth that. And to kind of churn things back a little bit, I think we offer would be 180 after cost. Let's see what 170 looks like. And we will offer them a 2% interest rate. Let's figure out what our PITI or principal, interest, taxes, and insurance. And all that really is your mortgage payment. We're going to use bank rate for that. So 170, I want to put 5% down. And we said a 2% rate? Yes, 2% rate. Zip code 72211. Property tax 22222. 223. We're going to round up. And let's see what we got. 945. So our PITI or principal, interest, taxes, and insurance are 945 a month. We'll plug that in. 945. And our potential rents we said were 1510, correct? 1540, sorry. Apples to apples. 1540. All right. Boom. We got a cash flow positive deal. And we got a whole lot closer to that price. Now, also, they're going to be getting a monthly payment of, well, they're going to get a principal and interest payment of 569 per month. So they're going to be continuing to make money on this property because we are going to upgrade them from the homeowner and or the landlord to the bank. So they don't have to deal with the four T's that property owners that rent do. So with all of these figures, our gross cash flow 595, war chest 231, management 154, net cash flow 210. Now we got to come in and figure out all our numbers. Because if it was just this, phenomenal deal. But remember, we got a big renovation to do here. All right, cash to the seller, that would be our down payment of 8,500. The agent commissions, let's try to throw $1,000 at them maybe. Assignment fee, we are not working with a wholesaler, so we don't have to factor that in. Our closing costs are just under 10 grand, and that's that same 4%. Reno is where it's going to come in. Interesting. So $60,000 renovation. I do feel like it is going to take more than 2 months of holding, but all 2 months of holding is just 2 months of this mortgage payment. Typically, that is your 1 month to find and place the tenant, to pay the realtor, and 1 month of vacancy. So arrears, we don't think there is any, and a good TC or transaction coordinator is about 1,500 bucks. So this would be a great way to get into a property at somewhat fairly low cost, because if you're coming in this low on a number, maybe we could say, hey, Mr. and Mrs. Seller, we'll pay you a reasonable price and we just want to borrow the money from you. We'll pay you an interest rate, but let us borrow the money from you to do these renovations and you be the bank for 12 months and we'll try to balloon you out within 6 to 9 months. Again, multiple different creative solutions to solve the same problem. But putting in almost $83,000 to take $210 a month, that is not a good ROI or return on investment. But there is a way to make this a good deal. The cash side, it just didn't work, at least on the front side. You would have to refinance. And a lot of people that are looking into real estate always look at a BRRRR, which is buy, renovate, refinance, or no, buy, renovate, rent, refinance, repeat. And that is the BRRRR method. So I think this would be a good house for the BRRRR method, whether you do a cash deal or a creative deal. That is going to do it here on this episode of the weekly deal analysis in the corner barn. What are your thoughts on Old Charter Court in Little Rock, Arkansas? Are you more of a cash deal or are you more of a creative deal? And if either one, are you going long term or are you just going to flip this thing and try to turn some dollars and make some dollars? I don't know. I'd love to hear your comments and your feedback. If you would please drop them in the comment section. That's it for this week. We'll catch you next week.